Hello and welcome to Hot Money on Bloomberg Quint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks buzzing in trade. I'm Neeraj Shah, filling in for Darshan Mehta for the day. Let's welcome our experts then. Kalra of Target Investing and independent investment advisor Sharmila Joshi with us on the show. Both of you, thank you so much for joining in today on Hot Money. Well, today on the show, let me tell you what's on the menu. We'll discuss the sugar companies. The stocks are buzzing in trade. FMCG, and they've come off a little bit from the recent highs, but do they give you a compelling reason? Coffee Day, forever an enigma, or at least an enigma for the last 12 months. Do our experts have a solution to that? Idea or Vodafone idea, as the case may be, and is that an idea to invest into right now? And then ABB India, it's been in many ways a mover of sorts in the last 1 month. It'll be interesting to focus on ABB India as well in the session today. So let's talk about the first pocket on the show today and bring up sugar stocks. They are trading with some healthy gains after the cabinet approved higher ethanol prices for ethanol which is made directly from sugarcane juice. What this would do, interesting, because maybe, just maybe, the production levels of sugar too could go down if indeed companies make this move of making ethanol directly from sugarcane juice. Let's ask our experts as to what they make of this move. Sharmila, views on sugar?
Well, very honestly, I'm not positive on the sector because I think, this ethanol news is again something that keeps, every time we see crude go up, you keep hearing of this news, this whole thing starts that ethanol is going to be mixed with petrol, and then we do this whole round, and now you're talking of raising ethanol prices. I don't know how that exactly would really mean that you'll actually lower crude prices, because let's not forget, if your crude prices, if you're buying in Mumbai today at 90 rupees, half of it is taxes. So if you're going to mix ethanol in it, which is worth 50 whatever rupees, or now you're raising it by another 25%, I don't know how that really helps. Overall, I'm not positive on the sector. So this is definitely something that I would stay away from. Okay, stay away from. Sameer, do you change your view a little bit after this move?
No, I don't, because ethanol production is not that easy. That said and done, what happens physically, if you need right around, we produce around 140 crore liters of ethanol today. They are targeting to double or triple that in the next 5 years. The acreage has to go up from 4% of total acreage to 10%. The water ground source is being used in India, whereas other places it's more of rainwater being used for the production. So there are a lot of background water usage, everything, which makes it tougher on the ground. It's better said than done right now. Yeah. And it may be a sentiment up move, but I don't think so, because the other issues mainly facing the sugar is the production which they have right now sitting on their inventories, which is stretching their working capital because they are paying on the higher receivables. So that kind of a stretch issue, if that gets resolved, I'll be much more positive on this sector. But just because of the ethanol prices going up, I don't think so that's a place to be.
Okay, let me try and play the devil's advocate. Now, let's assume there is X quantum of acreage which manufactures sugar cane. What this government's move would lead to is that if indeed I'm making ethanol directly from sugarcane juice, so therefore the quantum of sugarcane juice that was going into manufacturing sugar, some of it gets diverted to ethanol, because at these higher prices it is lucrative to manufacture ethanol as opposed to sugar. So therefore you getting better bang for the buck from ethanol, and if the sugar production goes down because some of it is getting diverted to ethanol, then the sugar quantum in the system goes down, and therefore that gives a floor to prices which hitherto almost every single year face a downward trajectory. So it's a win-win, and the valuations are in your favor.
See, on that, just let me give you a counter. Whenever you, like, if you see other crops, right, a lot of them are being used for feed, animal feed. Same will happen over here, that sugarcane is directly used for ethanol making, right? So that proportion increases, but the actual sugar going into the market, when the prices rise, right now the prices are low, so everyone is seeing the positivity in that. But when the output next year goes out or reduces, then you'll have a sugar shortage in the market.
Yeah, which is great for pricing.
Right? That's great for the pricing, but the inflation part hits up. Sugar right now,
the sugar impact on WPI is hardly anything now compared to what it used to be.
But the only point is on the See, it increases the price of the consumer staples as well. The raw material prices increases.
It's a sensitive commodity, you know. I don't think that sugar prices can be allowed to go up.
But they won't fall as much. That's the point, right?
And number two, I think the counter is that it's, as you know, Sameer was saying earlier, this is easier said than done. It's not possible for, you know, oil companies to just suddenly increase their the percentage of ethanol that they're mixing. We've seen these moves fail in the past, you know, and every time it's the same stocks that go up. The Prajas of the world, which are supposed to make the machinery that will help you do the mixing. You see the sugar stocks go up, and very honestly, nothing comes out, you know, at the end of it. We haven't really moved from every time you see crude go up, you hear this thing that ethanol should be mixed, and by the time, I mean, really nothing has come out of it. I would rather wait for something to come out of it.
So let's wait for something to come. I think that's the advice from both our experts. So yes, the stocks have gone up, but it may not be a sustainable move if our experts are to be believed. By the way, just keep in mind, WPI numbers are out as well, and the WPI number looking slightly better than what the Bloomberg estimate was as well. So some relief on CPI, some relief on WPI as well. Whether that lasts or not remains to be seen. However, so that's the first set of stocks, which is hot money. Let's discuss the next set of stocks, and which is the FMCG stocks. Now, the question mark only would be that if you look at the last 1 month, in the month of September, do FMCG stocks look like they are oversold? Now, do they present a tactical opportunity, Sameer?
Not for me. From the point I've seen, the valuations are still very high as compared to 5-year average P. They were trading around 30, 25 times 5-year average. Right now they're trading around 40, 45. So that's still a 100% premium of that 5-year average. So I haven't seen that much of correction. Yeah, from the tip, there might have been a correction, but they're not that lucrative to start buying and building up a huge chunk of the portfolio into consumer staples.
Okay, so you don't believe there is a tactical buying opportunity at all?
No, not right now, except if you see GSK Consumer Health.
Okay, we'll get to that in a bit. We'll get to that in a bit. This is a broad FMCG conversation. What about you, Sharmila?
Yeah, I would agree. You know, I don't think that, you know, if you're just asking in a broader sense, I think they can definitely correct more, because we have seen them really, you know, because consumption has been the theme which market has liked for the longest time, and you've seen most of the stocks really trade at valuations which are extremely fancy, you know, and especially all the HULs of the world, etc. So yes, I think given this correction, maybe they're available at slightly cheaper prices, but I think that maybe they can correct slightly more from these levels.
Okay, so maybe some more correction into some of the FMCG names. Now, I just want to discuss a couple of these bits. Now, Sameer, strong names, the volume growth numbers are not looking poor. The commentary from almost all the managements was very robust. There is a 10% dip in a very stable space. Why is it that they are not attractive?
See, if you talk about last 1 year, they have gone through the base of demonetization. They've gone through a destocking base of GST. Now that gets over. Now that story is over. So the volume growth base now normalizes. In next couple of quarters, these 20 or 21, 14% kind of a volume growths come in the base on quarter basis. So it'll be very difficult to give a 14% kind of a growth quarter on quarter on a higher base. So I think now I would like to see how they perform this quarter, because this will be the first quarter without GST issues, without demon issues coming in. So if they are, so the upside is still limited, right? Even if they show a 14%, they can move 10% back. But if they show any kind of a rationalization of 4 to 5% or a single higher digit, then the disappointment on the downside is very much there. So I would like to stay away, watch for this quarter, what kind of volume growth they give. And by that time, I would like to see a opinion over there.
Okay, Sharmila, I heard you mention that these stocks could correct further as well. Would you use that for across the bucket, or is there something that is post this correction looking reasonably value accretive?
I like Dabur at this price because, you know, I think that precisely I agree with the broader view that GST and demon, these were the two things that you were recovering from, and which is why you saw that excellent kind of volume growth picture that even Dabur reported with 21% rise in volumes, which is not something that you would forget seeing normally in Dabur. I think this is perhaps one of the best ever volume pictures they've presented. But I think that in at least some of their products, they seem to be on a strong wicket. And again, I think in terms of valuations, it did not go up as much as some of the other names within that space. So they were slightly more reasonable as compared to some of the other names. And I think that if you could watch it for a bit, and yes, I would think that maybe even this quarter numbers would be good, but perhaps the the real picture would emerge only another couple of quarters down the line. Then perhaps you could see some of these stocks become a little bit more range bound. But I think given the kind of product portfolio which Dabur has, as well as their growth across their various segments, especially honey, etc., this is a stock I like at this price.
Okay, so maybe Dabur, valuation-wise as well, arguably one of the cheapest amongst the large cap names, at least, if not the mid caps. So that's something that Sharmila likes. But consensus view being that there could be some more downside to some of these FMCG names. The third stock on the list, and something that we don't normally talk about too much, is Coffee Day. It's been having mixed days, but trading fairly well in an otherwise strong market too. The question mark only is, does it hit this ceiling at this 315, 320 level, or can this time around Coffee Day break out and move up further? Is there value out here? Sharmila, I want to start off this discussion with you.
No, I think that perhaps the valuations are now getting a little stretched. So while it's a story I like, I think I think the move that we've seen is a little bit news based and whatever. So I think that this stock should now, to my mind, it has reached very expensive levels.
Okay, expensive. If you can just pull up the chart of Coffee Day as well, maybe the last 1 month chart or this year's chart, and you will see what we're trying to say. This intraday chart is fine, but the last 1 month it has shown a 27% up move. So there's a big up move that has happened in Coffee Day over the last few days, so the last 1 month at least. Samir, do you track this one?
I do, but I'm still negative on it. If you remove the Costa being sold by to Coca-Cola, there was nothing additional coming to the stock which showed that up kind of a upside reason. If you see the results, they have flattened or going quarterly down. There's a heavy debt sitting on their books, which is putting a pressure on the interest costs. So now their interest costs have grown 30-40% up YOY, whereas the revenues and the profitability are still flattish or down. So I think over there they're facing fundamental issues. You can talk about the valuation of CCD, but that's a whole different situation. I think this is not a stock which I would like to hold on for a long term or even start buying. I think these kind of valuations are another 5 to 6% maybe the upside.
Okay, interesting. Now, I just want to club Sharmila the broader space, which is in a manner of speaking similar, if not the same, to a Café Coffee Day business. You could argue that it takes the shape and form of a QSR business, so to say, because it does form a part of that. I don't know if we can ascribe Starbucks and Tata Global Beverages thereby the way we would value a Café Coffee Day independently. How would you view this whole space? So there is the kingpin of sorts, Jubilant FoodWorks. Westlife has a very interesting last 12-18 odd months and valued slightly differently than you would value a Café Coffee. But this whole bunch of companies, is there merit in trying to own any of them, because they run the gamut from being extremely expensive to being completely out of favor the way Café Coffee Day is?
A very difficult question, I think, because while it's a space I like in the sense that I do think that, for instance, both the CCD as well as Starbucks have their, strong points in the sense that it is an aspirational sort of a society, and you do see many people, especially in tier 2, tier 3, increasingly begin visiting coffee shops, and, that's where the entire culture has shifted. But I just think, to just take off from what Samir was saying about say, for instance, the valuations of a CCD and the kind of debt that they're sitting on, the kind of numbers that they have given, there doesn't seem to be too much value at this current price in the stock. And I think even in, let's take the best case that, in the sense which is considered the best of the lot, which is a Jubilant Food. I think even they are going to hit this thing where, you're not going to get that SSG, which was so spectacular, which went down all the way from double digits to single digits and is now back up there, in that whatever 16, 17, 20% kind of range. I don't think that that's really sustainable, and I think that there will again come a question that what do they do with the kind of free cash that they are sort of generating. So while it's a space I like, I think a lot of either the stock price has now taken that into account, or so I would just really steer clear of this space as of now.
Anything in this space, Samir, for you? Quick 30 seconds.
So we own Jubilant Foods. If you see,
do we have a contra view here?
If you see,
it's great to have contra views, by the way.
We bought bought it at a very early
That's okay,
space.
but do you have a contra view
Right now, I believe so, because if you see Jubilant last 2 years previous to the upcycle which started for them, they invested heavily in store openings. So they have another year of the store openings coming into the SSG. So that helps out the double-digit growth which people are anticipating on the streets. Their second trigger which was coming was the everyday offers. So that has reduced the billing of a Jubilant food from a 600 plus for 2 pizzas to 100, 130. So that has triggered much more category people coming in and much more footfall increasing. So these are certain structural changes which are happening in the numbers. So there is a sustainability. Yeah, valuations are expensive, but if you see 5-year average, they have been trading at 90, 95. Right now they are around 70, 75. So there is a side of correction which we might have seen or will see, but I don't think so that's a problem for me.
Okay. So interesting. So depending on whose argument you find more compelling, you can decide whether or not you want to choose to get into Café Coffee Day, which is, well, of course, a consensus no, but maybe a Jubilant, maybe some of the other companies as well. Moving on, let's discuss Idea. Now the stock is trading close to 52-week lows. The question mark that almost everybody wants to ask, that at 46, has it bottomed out, or at 8 or 9 times EV/EBITDA, the overhang remains on the stock? And look at that. Any point of time you invested in Idea over the last 12 months, you would have lost money. Can we say that for the next 12 months, any point of time from here on that you invest money in Idea, you will make money?
So I've invested.
You have invested at these levels, or
starting at 55 levels in portions and bit. Logic being two, there are now stretch in the market. One is going to the Reliance Jio of the world, and Vodafone and Idea. What is happening that once the merger happens, now the merger has happened, the cost cutting plans were already in place. So these start coming in numbers also. So there is a slight improvement, maybe a quarter or a quarter away. And that will take up the valuations much more closer to Bharti Airtel. So right now you cannot value them at PE levels, you can value them at debt levels, let's say in that certain sense. So over there, there's a 30 to 40% gap in valuations of Bharti and Idea in a certain sense. So over there, I think Idea and Vodafone now being there, and if you see now Vodafone holds more of the company rather than the Idea. So I think now you have to give it a little benefit of doubt, which might play in a couple of quarters. But we are, as an in-house, we have kept the proportion of the weightage limited. So we are able to take that kind of a bet.
Okay, I'm gonna play devil's advocate. Let me try and figure out if Sharmila is also willing to play the devil's advocate on Idea.
No, I am the devil. I don't like this stock at this level.
Okay, but
because honestly, even at 52, which is probably the price they started buying, I thought, oh, it can't go really lower than this if you're talking of, you know. And again, I think I've suffered at the hands of being an ex-Loop customer. And then, you know, there was that whole story that Airtel is going to buy them, and then that never happened. And I mean, it was just a nightmare if you were a user. So you don't know how this thing is going to play out. That's my only thing, you know. Like, it's all very well to say that Idea, Vodafone, and then it's Vodafone's going to be it, and you should therefore keep that into mind, and Vodafone is going to emerge as a stronger player and make a strong case for buying Idea at this price. But I'd just rather wait, you know, because I still, let's wait for it to get done, because, you know, I think that we've seen many a times that something or the other comes up and there are delays and you don't see that merger going through, though now it seems we are increasingly getting closer to this one happening. But still, you know, I would just, the way things are in our context, I would just rather wait for it to happen. And yes, from the price, from the time it's been about 54, 55, it's looked like, oh, it can't go much lower, but it has. So I'd rather just wait.
The key question, Samir, forget the PE. I'm saying the EV/EBITDA or the debt to EBITDA, and it's just astronomical. The debt equity, debt to EBITDA, EV/EBITDA numbers that this stock has, primarily because of the debt on the books. What gives you the confidence that they will be able to come out of this whole imbroglio?
See, the only point which I see right now is they've paid a lot of money to the government, to a lot of places, and the main feature of telecom, if you see the industry level, the main cost cutting which you can do is on the employee and the officer side. So if apparently they have cut around 8,000 people already in the merger. Merger has already taken place. So on the ground, they were already ready with that. Offices have been reduced to 20-25% of capacity. So the cash flow generation will improve. I'm not saying they will repay the whole debt. I'm talking about from the point where they were. Now the rock bottom is closer or near there. Now the cash flow, when they start increasing in a couple of quarters, that really helps out. Because the valuation already is, like she's saying, I thought that it won't go down beyond 52, but it has gone down still. So somewhere that rationalization will come in, and I rather hold Idea as compared to a Bharti right now.
Okay, interesting. Well, so on a standalone basis as well as on a relative basis, Samir believes Idea is a good bet. Sharmila doesn't believe so. And again, it's good to get these differences because the different points of view come out. The last stock today that we want to discuss is ABB India. The question is, and just look at what the stock has done today. Look at what the stock has done over the last 1 month, 3 month, 6 month perspective, and you'll get the reason why we're talking about this. 3 month basis, the stock has rallied about 18%. For a company in the business that it is in, Sharmila, the question mark only remains that can they get an order book and thereby the execution and the rally for the stock? Can this 18% extend itself over the course of the rest of the calendar?
So first of all, a while earlier we were discussing sugar, which you said out of the 10 stocks which were buzzing, 8 were from sugar. So I think, every market has its some stocks catch your current fancy sort of, so it's like your new squeeze. So I think ABB has also been, that sector has also been something that markets like. But I think precisely, I would broadly agree here that I think that the rally can continue a little bit for the reasons that you mentioned. I think that their order book has shown a pickup, and lately some right noises have been made that they'll help in the seeing that public transport gets electric power and how to speed that up so that you're right up there with the rest of the developed countries as far as switching to electrification of vehicles goes, especially your public transport system, which is very, very important. And I think overall numbers have been sort of okay, but I think if you're broadly basing it on what you were saying, that you will see better execution because you have seen order book improve. So I think yes, maybe not much more from here because it's already gone up 18%, but I think that we can expect a level of about 1600 on the stock.
Interesting. Samir?
So I'm a little positive. I'm worried on the valuations the run-up has created. And right now, if you see, the results are showing that the execution is getting better. So the order book is one criteria, but the execution of that order book is much more, because they get orders where the power sector related, right? Most of them. And the clients are facing a lot of debt issues. So that's where the order remains in the book, but the execution level doesn't even start of some orders. So that's why the carry out is much more longer. So over there, the execution is getting better. I'm positive on that. The EV side, which they have the expertise on, and they talk about the EV charging at a quicker pace, which they have even piloted now in India. So I'm positive on that, but the valuations are too stretched as of now. So I think maybe around $1,000, I'll be happy to own.
Anything else in the space?
So if you're talking about the power sector, there's this MNC company called Spec. So they make the chemical used for the power insulation, for the wiring. They're a chemical-based company in that certain sense. Now they are planning to double the capacity in next 2.5 years for a 400 crore 15 kind of in next 12 months. So that will be a big trigger for them because they are the market share. They have around 80-85% market share. No debt, all cash. And that company, I think, has a bright future in India. And it's a MNC, so there's no corporate governance issues.
Mostly, yes. Sharmila, anything else, if not ABB? I mean, you actually bullish on ABB for holding on.
Yes, I think you should continue to hold.
Continue to hold.
Yes, yes.
Okay, great. So, well, that's the view on some of the companies, the 5 spaces that we wanted to talk about. Now, just a piece from Jayesh Kilani as well, because the country's 3 large fund houses have now put out their portfolio rejigs done in August. Let's go across to Jayesh and try and find out what ICICI Prudential Mutual Fund bought and sold last month. Jayesh.
Neeraj, some very interesting trends coming out from the stable of ICICI Prudential Mutual Fund, especially on the downside, what they have decreased their stake in. But first, let's have a look at where they have actually bought afresh, or they've increased their stake. Two nifty names really stand out from here, Vedanta and HDFC. Have a look at HDFC. They have bought 50 lakh shares in the month itself, and about 2.5 crore shares of Vedanta as well, followed by some of the mid-cap names like an Idea Cellular and a Federal Bank as well, about 80 lakh odd shares that they have purchased or increased their stake by, followed by Apollo Tyres, 50 lakh shares. But where I was telling you that some interesting trends coming out is the decreased stake. All of them are nifty names. So SBI, they have sold about 2.9 crore shares, followed by ICICI Bank in excess of 2 crores, as well as ITC. They have reduced their stake by about 2 crore odd shares. And you have ONGC and Power Grid, which also they have reduced significantly, more than 1.5 crore shares that they have reduced their stake by. So this is the interesting one that I was telling you about. But now let's have a look at where they have purchased afresh and sold off completely from their portfolio. Not much activity in the last couple of months that we have seen in terms of the new purchases and sell-offs from ICICI. So Credit Access Grameen, the IPO, they got about 9.5 lakh shares. Unfortunately, even if they would have bought it at the lowest price of last month, they would have still incurred a loss because the price is significantly lower from there as well. And you have matrimony.com, just about 50,000 odd shares that they have purchased. What goes out completely of the portfolio of ICICI Prudential is Triveni Engineering, Supreme Infra and Vakrangi as well. So all of these go out of the portfolio, but the clear standout was the nifty names that they have reduced the stake by.
Well, Jayesh, thanks for putting that into perspective. Really appreciate that. So we told you about HDFC Mutual Fund in the morning. Now ICICI will round up the day with a conversation on all the three on Countdown as well. But it's a wrap on today's Hot Money. Sharmila, Samir, thank you so much for joining in today and giving us your thoughts. And viewers, thanks for tuning in to Hot Money. Ask BQ is up next. Stay tuned to Bloomberg Quinn Live.